What if I told you that you could trade NQ and US30 without clutter, without 10 indicators, just on the 1 hour time frame? No noise, no overcomplication, just pure price action and just 2 indicators. Stick around because today I'm revealing exactly how I do it. Hi y'all, I'm Amos Affliger, an 80 years old day trader, and today I'm gonna reveal you my exact strategy that I use on NQ and US30 when I want a high probability setup without any type of stress and dashy, you know? And the best part is that this strategy works on the 1 hour time frame. So you don't have to watch all these candles moving up and down on the 1 minute, on the 5 minute time frame, on the 30-second time frame. You just look at the 1 hour time frame and you will be cool. So most traders fail because they overcomplicating everything. But if you call ignore the 90% of all the noise that you see around on YouTube, Instagram, TikTok, and just focus on 2 things, 2 indicators and 1 time frame with some confluences, you will be ahead of 90% of the traders. Today I'll show you my exact rules, my confluences, my strategy, my indicators, but just what I need to trade on NQ and US30. So y'all, we now on TradingView, and these are the 2 patterns that I look for every day on NQ. And let me break down for you. So as we can see right here, we have some Asia session which consolidate the most of the time. On London session we usually swap or either continue it and broke above these levels, Asia size or either highs as lows. We left a gap behind and a 930 on New York opens with a trace into it, and then we continue to the upside. So this is the second one, the false break. So we have Asia's consolidation as always. On London session we can, in this pattern, swap Asia size or either highs as lows, and then came back on the range or either on the other side of the Asia's range. So if we swept Asia size, we can close right then this swap inside this range and then also break and stay below the Asia's lows. So in this case we have a fast break, so we took all this liquidity right here, we came back, we left a gap behind at 9:30 a.m. when New York open, we're gonna retrace into it and then boom, continue to the downside in this case, or either to the upside with a fast break of Asia's lows. So to help me with this analysis, I have 2 indicators. So as we can see right here, let me go on US30. We can see this section right here, which is the Asia's range. So I mark also my Asia size and my Asia's lows, and this indicator is called E9 Asia session. As you can see right here, this is my setting right here. So if you want, just take a screenshot and copy and paste it. This line right here is my daily open. So ICT New York open, these are my settings. Just take a screenshot, copy and paste it, stop the video, I don't know. So like this, I can easily mark up my previous weekly highs and my previous weekly lows. So I'ma just go like this, and boom, I just marked up my previous weekly highs, my previous weekly lows. Also, I mark up my previous day's lows and my previous day's highs. So why I mark my previous day's highs, my previous day's lows, my previous weekly highs, my previous weekly lows, and also my Asia size and my Asia's lows? This because those are the zone with a lot of liquidity in the market. So we took our previous day's highs. We can, in this case, we had 2 previous day's highs very close one with each other. So this was also a more strong zone of liquidity. So in this case, as you can see, in London session, we swept, we broke to the upside these 2 previous day's highs, and in the next candle we just boom, smacked down and came back above our Asia size but below my previous day's highs. So in this case, this is 9 a.m. exactly, and if I go on a 30-minute time frame, probably this is also 9:30 a.m. So as you can see right here, this was a fast break. in this case we haven't came back to the downside right here, we haven't came back into the range of our highest session. So yeah, this was a tricky one, because this could have been also as a session like this, yeah, whatever it is, break to the upside, retest, and then boom. So this was a tricky one. So we mostly have a rejection on these previous day's highs and previous day's lows, on these as highs and as lows. So let me find another example. So guys, this was a trade that I took on my funded with my funded future. So let me just make a breakdown for you all. 8 a.m. we have equal size here, previous day size right here, this order block right here. So yeah, we was on this bull run, but if I trace my Fibo, we haven't touched my 0.38, 0.32, 38 and my 0.5. So yeah, we had this fair value gap right here, but this was on a premium zone, not a discount zone. So I wasn't even considering this fair value gap, because as you should know, all the fair value gaps above the 0.5% on a bull run are in the premium zone, and the real ones, the ones most effective, are those on a discount zone, so below the 0.5% of the Fibo. So I wasn't even considering these fair value gaps. So on as a session we consolidate, on London session we stayed in the range, but we broke to the downside, and we did some type of consolidation also here. So this was also a tricky one, I can't lie. But the fact that we haven't reached this previous day's highs, we haven't took this level to then respect it or break it, I was confident on the shorts, also considering that we haven't did a proper retrace. So we should have retraced at least into this 0.38. So I placed an entry at these two equals highs that was also close to this order block. So my feeling for this trade was, if we come back here and we left this two zone of liquidity right here, why the price should not get all the way down up here? I also traced this level of liquidity right here, but I didn't place my entry here because maybe we just swept this level and then boom, went to the downside. So at 9 a.m., 9:30 to be like precise, boom, this happened. And in just two candles, I target a 3.4 I think. Boom, in two candles smacked my TP. I could have let it run all the way till this fair value gap, but my strategy usually is a 1 to 2, so even a 1 to 3.4 was enough. I target, yeah, I can remember now, I target this level of liquidity right here. So this was a continuation pattern. So we haven't do a false break of either size, we just went all the way to the downside. Let me find another example for you. This is a perfect false break. So as we can see right here, consolidation as a session, we mark up the range, we don't give a fuck about if as a session go to the upside or to the downside, we just want the range. So we false break it on London session as always. Where is 9:30 here? Okay, yeah, this was 9. All right, yeah, this is a bit tricky. Order block, I look for order blocks or either fair value gaps. Yeah, that's the point. Boom, order block, 0% of it, 100 point of stop loss to be safe if you want. 1 to 2 risk reward, boom. And let me just make a pattern for y'all, so y'all can understand how this shit is real. Like the market move like this. So consolidate, range, fast break, boom, stayed in the range. Yeah, you was right. So fast break like this, we stayed in the range, we left an order block right here, boom, boom, 9:30, smacked my 1 to 2 risk reward. So this is how the market move every day, guys. I'm telling y'all, every day. So I'm telling y'all, implement this strategy on your trading system. Let me know if this video helped you, if these two indicators even helped you, because maybe you don't want to copy my strategy one-to-one, but you at least can copy my indicators, you know. So I hope you find this video helpful for y'all. And yeah, go check my TikTok account, my Instagram account, and I also have a completely free Discord community. So join y'all, you will find everything in the description. And yeah guys, I hope you find this video helpful. Subscribe to the channel, leave a like, and boom, we'll see you in the next one.